And a very good afternoon, investors. You're now on KleverStock with me, One Izul. I'll be serving you the midday roundup with the latest market updates from this morning up until now. So first of all, we kick it off with Bursa Malaysia updates. Trading on our local bourse commenced on a mildly positive note this morning as the local bourse showed signs of settling into a sideways pattern ahead of the upcoming Lunar New Year holidays. Now, the benchmark FBM KLCI rose 3.69 points to 1,751.23 at the opening bell, marking a resilient recovery from the previous session's sell-off. Rakuten trade characterized the recent market dip as a healthy correction, expressing optimism for a sustained rebound. However, Apex Research cautioned that profit-taking might persist in the near term, citing fragile sentiment fueled by geopolitical tensions and policy uncertainties. Now, despite these headwinds, the research firm noted that continued foreign fund inflows into Asian markets should provide a floor for the index, specifically supporting large-cap defensives with clear earnings visibility. Now, domestic investors are keeping a close watch on high-stakes economic data set for release this week. The Department of Statistics Malaysia, DOSM, is scheduled to release the actual fourth quarter 2025 GDP data on Friday, February 13th. So, early advance estimates project a robust growth of 5.7%, which would represent the strongest expansion since mid-2024. Additionally, Malaysia's labour market continues to show historic strength. Recent reports indicate the unemployment rate hit a decade low of 2.9% in the late 2025. Apex Research added that attention will be on Malaysia's unemployment data for cues on the economic outlook, as the strength of the job market remains a key pillar of domestic consumption. On the international front, the focus has also shifted to the US non-farm payrolls (NFP) and the unemployment rate. Originally delayed by a brief federal government shutdown, the high-stakes January NFP report is now set for release later today, February 11th. Though market consensus expects the US economy to have added roughly 70,000 jobs, with the unemployment rate holding steady at 4.4%. Now, these figures are critical for global traders as they will provide further clarity on growth and policy direction, and also signal the Federal Reserve's likely trajectory for the first half of 2026. Moving on, blue chips led the charge in early Wednesday trade, with Petronas Gas rising 16 cents to 18 ringgit 50 cents, MISC gained 8 cents to 8 ringgit 18 cents, and 99 Speedmart Retail up 5 cents to 4 ringgit and 1 cent. In the broader market, penny stocks remained largely unchanged, with MMAG flat at 4.5 cents, while Valesto holding at 31 cents. As the festive break nears, traders expect the index to maintain its support levels that's anchored by the strong performance of the financial and utility sectors. We now move on to local currency and foreign exchange. Now, the Malaysian ringgit maintained a flat trajectory against the US dollar at Wednesday's opening, as global investors adopted a wait-and-see approach ahead of a critical batch of United States labor market data, which is scheduled for later today. At around 8 a.m. this morning, the local currency, our ringgit, was quoted at 3.9220 or 3.9345, and that's against the greenback, the US dollar, remaining virtually unchanged from Tuesday's close of 3.9220 or 3.9260. The market's caution follows a brief federal government shutdown in the US, which delayed the release of the high-stakes January non-farm payrolls report until today. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Abzanizam Abdul Rashid, he noted that while the US dollar index nudged up slightly to 96.865, underlying sentiment for the dollar remains under pressure. Recent US retail sales data for December 2025 came in flat, significantly missing the consensus estimate of 0.4%. Dr. Afzanizam explained that US retail sales were unchanged month on month, suggesting weaker consumer sentiment and slower spending momentum. Now, this weakness has placed an even greater spotlight on the upcoming non-farm payrolls and unemployment figures. Markets are currently forecasting an addition of 70,000 jobs, and that was up from 50,000 in December, with the unemployment rate, of course, expected to hold steady at around 4.4%. Now, while external factors remain volatile, the outlook for the Malaysian economy continues to be supported by strong domestic fundamentals. High-frequency data released earlier this week shows the nation's core sectors gathered pace in the final quarter of 2025. Now, the index of services grew by 6.5% in the fourth quarter 2025, improving from 5.5% in the previous quarter, while the IPI, or the Industrial Production Index, expanded by 5.0%, and that's up from 4.9% previously. So, Dr. Afzanizam noted that traders and investors remain positive on Malaysia, adding that these figures provide a solid foundation for the official fourth quarter 2025 GDP announcement scheduled for Friday, February 13th. Now, the ringgit showed broad strength against other major and regional currencies at the opening. It strengthened against the British pound to 5.3465 or 5.3635. It also rose versus the euro to 4.6621 or 4.6769. Regionally, the local note was slightly higher against the Singapore dollar, trading at 3.0989 or 3.1090, as well as the Thai baht at 12.5420 or 12.5920. However, our ringgit did weaken against the Japanese yen, which has seen renewed safe haven demand. Now for some local economic news. The long-anticipated success of the base medical and health insurance Takaful MHIT plan, scheduled for a pilot in late 2026 and a full rollout in early 2027, remains dependent on the government's ability to implement structural cost controls across private hospitals. MBSB research warned that without integrating insurance reforms with hospital price regulation, the proposed no-frills plan could remain financially out of reach for the public. Now, the research house noted that moving forward, the success of this reset will depend on the government's ability to enforce clinical governance and the industry's willingness to embrace value-based care. Now, the base MHIT plan, a pillar of the government's reset strategy announced last year, aims to provide standardized, affordable insurance coverage. In a historic departure from local market norms, the Health Ministry confirmed the plan would include coverage for pre-existing conditions, a category traditionally excluded or heavily penalized with loading fees. Now, this is a significant departure from the current Malaysian insurance market, where such conditions are almost universally excluded or led to outright coverage denial. That was highlighted by MBSB research. By including these chronic illnesses, the plan seeks to bridge the protection gap for the middle income M40 group, who are often priced out of private healthcare. Now, for major hospital operators like IHH Healthcare and as well as KBJ Healthcare Berhad, the new plan signals a fundamental shift from price-driven to a volume-driven business model. Now, the government is pushing for a transition toward diagnostic-related group or DRG payments, where hospitals receive fixed rates based on diagnosis rather than itemized billing. While this transition may compress margins, the influx of newly insured patients is expected to boost occupancy rates. MBSB research noted that while IHH may face lower revenue intensity as the base plan covers essential lower margin care, it has the capacity to create high volume, cost-effective packages to maintain their returns. Now, conversely, KPJ Healthcare is viewed as the primary beneficiary of the plan due to its extensive domestic network and also focus on secondary care that aligns closely with the base plan's objectives. To ensure the sustainability of the insurance pool, the Finance Ministry has defended the inclusion of deductibles and co-payments. These are described as deliberate tools to inject transparency and discipline into the private healthcare market, discouraging overutilization by both patients and providers. MBSB Research maintained a positive recommendation on healthcare stocks, but remains cautious regarding the immediate earnings impact during the transition phase. Both IHH and KPJ are currently under review with neutral calls as the industry prepares for the 2026 standardization phase. Continuing with more economic news updates. Malaysia's industrial sector is projected to maintain its expansionary path throughout 2026, though at a more normalized pace as the global trade environment faces increasing pressure. According to Hong Leong Investment Bank HLIB research, the Industrial Production Index IPI is expected to grow by 3.4% this year, and that's supported by a firm exit from 2025 and resilient domestic consumption. The research house noted that the outlook is anchored by improving manufacturing conditions, with the Global Purchasing Managers Index, or the PMI, for the sector rising to 50.9 in January 2026. Now, this signals a modest recovery in international production activity, even as new export orders continue to face volatility. HLIB research stated that Malaysia's manufacturing sector is expected to remain resilient against persistent global trade uncertainty, supported by continued export expansion and steady domestic demand. So recent data from the Department of Statistics Malaysia reveals that the IPI ended 2025 on a high note, accelerating to 4.8% year-on-year in December, surpassing the expectations of 4.5%. Now, this growth was primarily fueled by manufacturing output, which hit a 17-month high on 6.7%, and also a surge in electricity generation. While the manufacturing engine hummed, the mining sector experienced a slight 2.5% contraction in December, and that was weighed down by a decline in natural gas output. For the full year of 2025, the IPI growth remained stable at 3.6%, broadly aligned with the 3.7% recorded in 2024. Now, BIMB research remains constructive on the direction of growth but maintains a cautious stance, matching Hong Leong Investment Bank's 3.4% projection. Now, the firm also warned that several external risks remain on the radar, including potential changes in US tariff policies, as well as geopolitical tensions and commodity price volatility. TA Research further highlighted that the manufacturing sector's 6% expansion in the final quarter of last year was a key driver for the broader economy, as reflected in advanced GDP estimates, which project the fourth quarter 25 growth at 5.7%. HLIB Research has kept its 2026 GDP growth forecast unchanged at 4.5%, banking on the sector's ability to absorb external shocks through a diversified export base as well as healthy labor market. As industry analysts noted, while the trajectory remains positive, the era of rapid post-pandemic recovery has also transitioned into a more stable phase. How durable the current upswing proves will hinge on domestic demand strength as well as the sector's ability to absorb global trade and cost-related shocks. We'll now go for a short break, but don't go away. We will return shortly with corporate news developments. Hope you guys are enjoying your lunch. And welcome back to the Midday Roundup. Let's continue with some corporate news updates. Sunway Healthcare Holdings Berhad has solidified its path toward one of the most anticipated public listings of the year by entering into a formal underwriting agreement with a major syndicate of investment banks. This agreement signals the group's readiness for its IPO on the main market of Bursa Malaysia, a move expected to set a new valuation benchmarks for the regional healthcare sector. The underwriting syndicate includes several of Malaysia's leading financial institutions that include Maybank Investment Bank Berhad, AM Investment Bank Berhad, Affin Hwang Investment Bank Berhad, CIMB Investment Bank, RHB Investment Bank, as well as Kenanga Investment Bank. Now, under the terms of the arrangement, Maybank and AM Investment Bank will serve as joint principal advisors and global coordinators. The group intends to officially launch its prospectus within the first quarter of 2026. The proposed IPO is structured to include up to 1.969 billion shares. That's consisting of 1.39 billion existing shares and 575 million newly issued shares. The offering is divided into an institutional portion of 1.62 billion shares, roughly 14.1% of the enlarged share capital, and a retail portion of 345 million shares. As of January 2026, Sunway Healthcare Group has established itself as a cornerstone of Malaysia's medical landscape, boasting a total licensed capacity of 1,805 beds across its integrated network. Now, this includes flagship facilities such as Sunway Medical Centre in Sunway City, alongside newer centres in Velocity Penang, Damansara and Ipoh. Sunway Healthcare Group President Dato' Lau Beng Long emphasized that the transition to a public company will provide the necessary financial infrastructure to scale operations more aggressively. He also noted that the listing would strengthen the group's ability to execute its long-term growth strategy by improving access to capital markets and enhancing financial flexibility. Now, the capital raised from the public issue will be dedicated primarily to infrastructure development. According to Dato' Lau, the IPO proceeds raised will be primarily utilized for capital expenditure to support the expansion of existing hospitals, enabling the group to pursue its growth plans more independently and efficiently. Now, analysts from Hong Leong Investment Bank have suggested the listing could value the group at approximately 16 billion ringgit, potentially outperforming traditional valuation multiples seen in the sector. The listing is timed to capitalize on the silver economy and Malaysia's growing status as a medical tourism hub. With the Malaysia Healthcare Master Plan 2026 targeting 12 billion ringgit in industry revenue by the year 2030, Sunway's move is viewed as a strategic vehicle to propel its next phase of regional dominance. Up next, we have some business updates. Two premier higher education institutions under Majlis Amanah Rakyat, also known as MARA, University Kuala Lumpur, UniKL, as well as University Polytech Malaysia, UPTM, they're posed for a historic debut on the main market of Bursa Malaysia within the next 3 years. Now, Deputy Prime Minister Datuk Seri Dr. Ahmad Zahid Hamidi, who also serves as the Rural and Regional Development Minister, announced the target following the conclusion of the ministry's annual agency retreat. He confirmed that both institutions have met the fundamental profit track record prerequisites necessary for a public listing. The Deputy Premier said, "We have set a maximum time frame of 3 years from now based on the profit track record, which is a prerequisite for listing on Bursa Malaysia. To fortify their financial standing ahead of the IPO, MARA has mandated a strategic shift toward high-growth, high-value educational sectors. This includes a heavy focus on curriculum integration with artificial intelligence, the Internet of Things, and robotics." Now, the plan also involves an aggressive push to increase student enrollment, particularly from international markets, to diversify revenue streams. Now, these efforts align with the Bumiputra Economics Transformation Plan 2035, which aims to elevate Bumiputra equity ownership and participation in high-skilled technology sectors. Now, beyond education, the government is looking to streamline its healthcare investments. 3 existing entities, Uni Clinic, Uni Pharmacy, and Uni Clinic Pergigian, will be merged into a single Mara professional entrepreneur entity. This consolidated group is also targeted for Bursa Malaysia listing within the same 3-year window. The move is designed to create a more robust corporate structure for Bumiputra professionals in the medical and pharmaceutical fields. Now, Zahid Hamidi also noted that these entrepreneurs who initially received Mara financing will be guided through the transition to become a publicly listed professional entrepreneur entity. The retreat also produced 28 game-changer initiatives aimed at monetizing rural development for the 2026-2030 period. Now, this is based on the retreat that the ministries had. Key among these is the transformation of selected rural districts into integrated investment hubs designed to attract high-value industries. Additionally, a new rural commercial one-stop center complex will be established to centralize the marketing and distribution of local products and services. So the ministry has set an ambitious annual sales target of over 14 million ringgit for this center, aiming to provide a significant boost to the socio-economic well-being of rural communities. Finally, we're going to be wrapping it up with some major corporate developments and deals across Malaysia. Here are some of the biggest headlines for today. At number 1, Exim Hospitality Berhad. They've proposed to diversify into construction works and centralized procurement of building materials and household appliances, a move expected to contribute at least 25% of future net profit. Our next headline at number 2, MISC Berhad. They've secured a firm 15-year period with an option to extend for a further 15 years, chartering contract from ExxonMobil PNG Limited to supply floating storage and offloading unit in Papua New Guinea. Our next headline at number 3, Bosted Heavy Industries Corporation Berhad said controlling shareholder Bosted Holdings Berhad has proposed to privatize the company via a selective capital reduction and repayment exercise at 48 cents per share, valuing the deal at around 149.6 million ringgit. Our next headline, EG Industries Berhad said it has held a groundbreaking ceremony for its new manufacturing facility at 304 Industrial Park in Prachinburi, Thailand, via its wholly owned subsidiary SMT Industries Co Limited. Number 5, the headline reads, Iskandar Waterfront City Berhad said it is disposing of a 16.4-acre parcel of vacant land in Plentong, Johor Bahru for approximately 71.6 million ringgit. Number 6, the headline is JS Solar Holdings Berhad said it has entered into a 2-year memorandum of understanding with Noor Power Sidian Berhad to explore collaboration on rooftop solar renewable energy projects, including battery energy storage systems within the Kulim High-Tech Park in Kedah. And finally, Petron Malaysia is refining and marketing Berhad. They've cautioned that a prolonged force majeure event at its Port Dickson refinery will continue to weigh on its financial performance. So keep an eye out on that. That is a wrap for the Midday Roundup with me, Wan Izzul. Thank you so much for choosing us investors. Stay tuned on KleverStock for more upcoming live stream programs. Hope you have a wonderful day ahead on this beautiful Wednesday. Thank you.